Welcome to the first episode of Accounting Made Easy. Decoding income statements will be the first topic in this series. In this video, we will explore the world of income statements and unravel the valuable insights they provide about a company's financial performance. Income statements serve as a vital tool for understanding revenues, expenses, and profitability over a specific period. Let's explore the key components and learn how to interpret these statements effectively. Revenue represents the inflow of funds from primary business activities. It includes various types such as sales revenue, service revenue, or interest income. Understanding revenue sources is crucial to determining company income. Cost of goods sold. The cost of goods sold represents the direct expenses associated with producing goods or services. It encompasses raw materials, labor, and manufacturing overhead. Calculating the cost of goods sold provides insights into direct costs incurred to generate revenue. Gross profit represents the result of subtracting the cost of goods sold from total revenue. It reflects the profitability of a company's core operations before considering operating expenses. Analyzing gross profit helps assess a company's ability to generate revenue efficiently. Operating expenses, which include costs associated with day-to-day business operations. These expenses consist of salaries, rent, marketing costs, and utilities. Understanding operating expenses is crucial to evaluating a company's financial health. Operating income is calculated by subtracting operating expenses from gross profit. It represents profitability achieved from core operations. Analyzing operating income provides insights into profitability driven solely by business activities. Other income and expenses consist of non-operating items such as interest income, interest expenses, gains or losses from investments, or one-time events. Understanding these factors helps evaluate a company's financial performance beyond its core operations. Finally, net income, which represents the overall profitability after accounting for all revenues, expenses, taxes, and other factors. It serves as a key measure of company financial success. With a solid grasp of the components, let's explore the importance of interpreting income statements. There are two main analyses that helps us derive meaningful insights and make informed decisions: vertical analysis and horizontal analysis. Starting with the vertical analysis, which allows us to compare each line item on the income statement to net sales. This analysis helps assess the relative significance of each component and identifies the contributions of different elements to the overall financial picture. Horizontal analysis, on the other hand, involves comparing income statement figures across different periods. By analyzing trends and changes, we can identify patterns that highlight a company's progress or potential challenges. Now that we understand the basics of interpreting income statements, let's explore some specific tools and techniques that can further enhance our understanding of financial performance. Common size statements express each line item as a percentage of net sales. This approach enables us to evaluate the relative proportions of various components. It helps identify areas of strength or weakness in a company's financial structure. Meanwhile, profitability ratios such as gross profit margin, operating margin, and net profit margin offer insights into a company's profitability. These ratios help assess the effectiveness of management in generating profits and provide benchmarks for comparison. Let's consider Google income statement as an example. Google, a tech giant known for its innovative products and services. Taking a closer look at their financial performance, starting with the revenue side, Google reported $235.7 billion in total revenue during the fiscal year. Moving on to the cost of goods sold, we can see that Google incurred a cost of $95.7 billion. After subtracting the cost from the total revenue, Google achieved a gross profit of $140 billion. This indicates the profitability of their core operations before considering operating expenses. Now let's focus on operating expenses. Google's income statement reveals operating expenses of $73.7 billion. These expenses encompass research and development costs, sales and marketing expenses, and general administrative expenses. By deducting operating expenses from gross profit, we arrive at operating income, which is $66.3 billion. This figure demonstrates the profitability derived from their core business activities. After considering all revenues, expenses, and non-operating items, Google reported net income of $59.3 billion. This final figure represents the company's overall profitability. Now that we have examined Google's income statement, let's apply vertical and horizontal analysis. Vertical analysis allows us to compare each line item on the income statement to total revenue. For example, if we calculate gross profit as a percentage of total revenue, we find that it represents approximately 59% of Google's total revenue. This indicates that Google has a strong margin on its products and services, a crucial metric for evaluating profitability. Now, let's move on to horizontal analysis. This analysis allows us to assess the growth or decline of various components over time. For instance, if we compare Google's revenue from the current year to the previous year, we might observe a 15% growth rate. This suggests that Google's top-line revenue is increasing, indicating positive performance and market expansion. Combining vertical and horizontal analysis helps evaluate the relative importance of each line item and identifying trends that reflect the company's financial health and performance. In conclusion, income statements serve as powerful tools for evaluating a company's financial performance. By decoding and analyzing the income statement figures, we can gain a comprehensive understanding of a company's revenue sources, expenses, and overall profitability. Now that you have a solid foundation in decoding income statements, I encourage you to apply this knowledge to analyzing real-world companies. Thank you for joining me in this episode. Stay tuned and keep learning.